Ladies and gentlemen, hit subscribe to this channel right now. The stock market crash, the global stock market crash that I've been predicting for 2 years now is taking place, unfortunately. Hit subscribe to this channel. Go to the stock market crash channel right after this live stream. I will have a live stream on the stock market crash channel as well at around 8:15 p.m. Eastern. Hit subscribe, Forbes, and you will hear the market analysis in just 1 second from financial experts. This thing is huge, it's cataclysmic, and it's directly the fault of Biden and Harris's energy policies, economic policies. The Democratic Party, media, and bureaucrats shut down economic activity 4 years ago, pumped trillions into the economy, then made it difficult for oil and gas companies to operate, then said inflation was temporary. Then they flooded strategic petroleum reserves into the country. We can go on and on. Then most of the jobs we've seen have been government jobs. The jobs market is terrible. Inflation is through the roof. Interest rates are through the roof. They flooded strategic petroleum reserves. It didn't help. They begged other countries for oil. Trump is coming to the rescue. He's going to win in 2024 because of all of this. Forbes, Kamala crash. Trump blames Harris for stock market downturn. Newsweek, Donald Trump no longer takes credit. Trying to take credit for the market. He hasn't taken credit for the market in 4 years. CNBC, Trump blames Harris Biden for stock market meltdown after taking credit for past performance. Yeah, when he first left, he said, hey, look, we rebounded. Now it's been a catastrophe. Anyway, hit subscribe to this channel. It's all over the news. This is a terrible, terrible market meltdown. The only silver lining is that it gives Trump a 199% victory. That's the political angle or component or analysis here. A lot of my viewers, God bless you, and I'm so blessed to have everyone here. Most of my viewers enjoy the political analysis. But now, ladies and gentlemen, the economic and stock market analysis is merged, combined, is the exact same thing as the political analysis. The more the market melts down because of Biden and Harris's policies, dreadful foreign policy, dreadful and abysmal economic and energy policies, the better the chance Trump has to win in 24. I think he's already won it because the genie is out of the bottle, the toothpaste is out of the tube. To my super chat, I cannot thank you enough. If you want to give a super chat, ask me questions about the market. I have been predicting this for 2 years. Read my Federalist article on hagoodman.com. Go and watch the playlist. It will be below in the pinned comment, or you can go on the playlist on this channel. Let's get started, people. God bless you all.
Time now for the word on Wall Street. Top investors watching your money. Joining me now is Claro Advisors Managing Principal and Founder Ryan Belanger. Also with me, Mark Tepper. Ryan, I do want to start with you on the sell-off that we're watching this morning. This is the first full trading week of August. We hope this isn't some ominous sign. Dow is down 782. The Nasdaq is down 803.
By the way, the Dow was down 1,000, Nasdaq down 636. S&P got pummeled. Nikkei down 12% yesterday. It'll be very interesting what the Nikkei is tonight. I will have a live stream this evening.
That is more than 4.25% of a sell-off. The Nasdaq entering correction territory on Friday on the heels of that jobs report.
By the way, also be here. Be on the Stock Market Crash channel. Hit subscribe if you're new, but go to the Stock Market Crash channel. After this live stream, I will have a live stream there.
Action.
Morning. I say buckle up, folks. I think this is the sentiment shift that we've been waiting for. There's definitely been froth in the market for some time. Earnings actually haven't been terrible, still up 12% for the quarter. So it's not so much that. It's just this employment number that came out Friday that really shocked people. It seems to me people were really singularly focused on the path of inflation, which has been good, but there's a dual mandate And we've been very concerned that people would be not focused on the labor market as much as they should be. So we're a little bit concerned here, but this, if this is the start of the recession, these things don't have to be terrible. So I wouldn't want people to panic. These are part of the economic cycle, but it is definitely worrisome, and investors are definitely taking notice of these large swings.
I'm glad you said that, because look, Mark, 800 points to the downside isn't 800 points to the downside a decade ago.
Right. You don't have to panic, but understand that it's going to crash a lot further. This is not just a correction. This is something that I've been predicting for years now. And if you watch this channel, pretty much every segment, every live stream, every upload I've done, and I've said, it's going to be a terrible, terrible market crash. And we're seeing that right now. It's because of the policies of Biden and Harris. We had record low poverty with Trump. Fact, we had record highs in household median income. Fact, low inflation, low interest rates. We have the opposite with Biden. High interest rates, high inflation, and energy policies and foreign policy that have led to an unmitigated catastrophe. When Democrats push to shut down economic activity in the most apoplectic, foolish decision-making process, what happened is they pumped trillions into the economy, spiking inflation, then they raised interest rates, and at the end of the day, it has led to a catastrophe, a disaster in terms of the financial markets. I think you'll see hedge funds, you'll see crypto Ponzi schemes, you'll see small regional banks go under and go bankrupt, unfortunately. Not for the Ponzi schemes, but you're going to see a lot of good people lose a lot of money because of the policies of Biden and Harris.
These numbers don't look good. Certainly we have concerns. But at the same time, what goes up must come down, and some say that corrections are healthy for the market. I think the bigger concern really is the economy.
Yeah,
right now.
Yeah, and obviously if we enter a recession, it's not going to just be a correction. We'll see a full-blown bear market, which would be painful for a lot of people. But we were talking earlier today. We've been through this before. 1, 2, 3, 4% sell-off really doesn't cause most investors to change their strategy unless you're making knee-jerk reactions.
This is not simply, in my view, the Nikkei doesn't go down 12%. The greatest drop and loss since 1987. The Nikkei doesn't go down 12%, and then you have all the markets throughout the world down big. In India and the UK, all down big. This isn't just a correction and then back to normal, making money in the market and the market going up to new highs. This is the stock market realizing that all the trillions of dollars in stimulus and monetary and fiscal stimulus have led to a gigantic bubble that's bursting. Let's continue.
But when you kind of just look at everything that's happening right now, to your point, I mean, a lot of these tech stocks got to the point where they were overextended. And I've been very critical of Apple over the course of the last few months. And we just found out that Warren Buffett has shed roughly half of his Apple holdings over the course of, I don't know, maybe the last quarter or so. But you look at a company like Apple, which isn't growing as fast as they used to, trading at a higher multiple than they've really ever traded at. And at some point, the results have to be there. And when you look at just AI specifically, we don't really see the results yet, right? The ROI, the return on investment, is not there just yet, and investors are becoming a little impatient. And then you go to the Friday jobs report. I will mention one more thing. Yeah, that was a terrible jobs report. That, to me, signals recession, but it is one data point, Cheryl. Like, you could get a better jobs report next month, post-hurricane. So we'll see what happens there. Again, I think it's best that people don't make knee-jerk reactions.
Ryan, do you agree with that?
Yeah, generally I do. I think it's, but also let's just zoom this out a little bit. What's a 25 basis point cut going to do for most folks in this country that have seen their grocery prices go up 30 or 40%? I mean, that's not going to make a difference for them. These are compounded problems over the last few years that need to be sorted out. And sometimes this is the pain that you have to go through, unfortunately. You don't wish this on anybody to lose their job, but actually this number was more people looking for jobs. The labor participation rate was going up. So who are these people? Are these immigrants looking for jobs? Are they retirees that have said, look, I can't afford groceries anymore. I've burnt my savings. I've maxed my credit card. I got to go back to work. We got to figure out who these people are. And as Mark said, we're not going to know this number. The next labor number doesn't come out till September 6th after Labor Day. So everyone's looking to next week's rate, the CPI number next week. But who really cares at this point? We got to worry about the labor market. So we have another month to go. And so we'll see what happens. But I think there's a more structural issue here for the economy.
Well, Mark, I will say that this certainly does bode well for those on Friday that began to make the bet that they were going to see a 0.5 point cut at the September meeting for the Fed. But you also have pointed out repeatedly that as far as Americans go, the personal savings rate has been going down.
Yeah.
You and I have talked about that on the air, actually. So it really does come down to the health of the consumer, which is 2/3 of the economy.
Yeah, I mean, consumers are saving less money. They are reaching for their credit cards more often. They are racking up buy now, pay later debt.
We have record highs in credit card debt. Okay, we did not have the debt problem during Trump's administration up until the end. Whenever anyone says Trump racked up the debt, that is a deceitful, disingenuous, petulant lie by omission. Trump did not rack up the debt. Democratic governors shut down economic activity gleefully because bureaucrats and experts told them to do so. And then what was Trump supposed to do? Not sign stimulus bills? But this gentleman is right. I mean, the rate cuts aren't going to do anything right now. The genie is out of the bottle. The toothpaste is out of the tube. You know what? If you remember the great late Chick Hearn, if you're a Lakers fan, the Jell-O's jiggling, the butter's getting hard. And so the refrigerator door is open or closing. I forgot exactly how it went, but it's done. The market crash is going to get a lot worse.
It's estimated that there's like $700 billion in buy now, pay later debt. And don't look now, but Affirm, one of the biggest buy now, pay later companies, is one of the worst performers in the pre-market today. But when we talk about the savings rate, I also want to talk about the savings interest rate. So one of the things that's actually been helpful to the economy over the course of the last year and a half is the fact that people are earning 4 or 5% on their savings accounts, on their money markets, because not everybody is an investor. Some people don't understand stocks, they don't understand mutual funds, ETFs, and they just want to go to their bank and earn 4 or 5%. Well, right now, the Fed fund futures are pricing in 6 rate cuts by the end of January. Not the end of next year, the end of January. If that happens, you're going to see a lot of these savers. They're going to be hurt because they're not going to be earning enough. And then where do they?
But if they do that, maybe they'll be forced to do that because the market crash. If they do that, you're going to have inflation skyrocket. Again, the inverted yield. The 2-year Treasury has a higher yield. A little bit higher now. It was a lot higher the other day than the 10-year. That means that investors are betting short term. They don't have confidence long term in the U.S. economy. That's not good. That's not good. Let's listen to this. Today, it was a crazy, crazy day in the market. Again, the link between the market and Trump. Paul Bartlett, thank you. Thank you, Paul. Greatly, greatly, greatly appreciated. Paul, thank you. And Stephanie, thank you so very much, Stephanie and Paul. To my super chat, thank you. The link is from here on out, people, ladies and gentlemen, everyone watching here on H.A. Goodman, this channel. By the way, be at the live stream on the Stock Market Crash channel right after this. But everyone watching, I want my viewers to understand, I want Trump to win. You want Trump to win. Forget the polls. Forget media. Forget the rallies. Forget speeches. Forget debates. Forget everything but the economy and the stock market. The reason I say the stock market is because it's going to be an absolute cataclysmic disaster. Directly the fault of Democrats and Biden and Harris. It's at the tail end of their tenure. And unlike Trump, with the tail end of his tenure, Republicans have zero input on what's taking place now. Media they have zero input. This was a long time coming. This was mismanagement by Democrats, by people in power, by people in charge. And we're seeing the consequences of anointing candidates that have no business being in office. Like, for example, the wonderful Biden, who was ousted and forced out by his own political party because he was so terrible. Don't think it was just because of a one-day debate. They knew he couldn't communicate. They knew he was one fry short of a Happy Meal. They knew that the lights were on, but nobody was home for 4 years. Then they used 3 weeks to destroy their own political party and media. He couldn't withstand 3 weeks of media. Trump has had 7-8 years of the same apoplectic, hysterical, negative, sinister coverage. And Biden couldn't withstand even 3 weeks. It took 3 weeks of never-ending media, negative media, to oust him. And with Trump, he just flicks them off his shoulder.
Just be a pause before the next wave of selling comes along. But for now, we can call it a day here for Monday.
Yep, we got the bells. There you have it. Volume is really high here. We're just settling out, but the S&P looks to be closing down around 3%. The Nasdaq off by about 3.4%. The Dow Jones Industrial Average off by about 2.6%. Again, volume pretty strong on this Monday, Carol. All right.
1,033 points down, 160 points down in S&P, 2.99% down in the S&P, and 576 points down in the Nasdaq. Ladies and gentlemen, I'm not making a prediction about where the indices will be, but you could see 4,000 in the S&P. You could see 2,600 with the Dow. You could even see 3,500 with the S&P, or 3,800. You could see 14,000 or 13,000 with the Nasdaq. Okay? Or even lower than what I'm saying. I mean, you can watch this, a year from now, or 5 months from now, or 2-3 months from now. See if I'm even close. Because it's going to be a terrible, terrible, terrible financial downturn.
All right, and looking at the S&P 500, folks, we've talked about it, right? Pretty broad-based selling, 482 names in the S&P 500. Lower today, Scarlett, 21 to the upside.
Yeah, let's take a look at the IMAP, which should be pretty red across the board here, because if you slice the S&P 500 into 11 sector groups or 24 sector groups, everything is down. In fact, by 24 groups, yeah, the best performing group is household.
Look at that. Every single sector in the S&P 500, industrials, consumer staples, energies, materials, utilities, healthcare, financials, real estate, consumer discretionary, communication services, information technology, all down today. Ladies and gentlemen, this is not a stock market or financial channel. The stock market crash channel will be more so that go to the live stream after this. People, you have to, ladies and gentlemen, respectfully alter, just for about the next 3-4 months, alter your thinking about politics. It's not only about the Supreme Court now. It's not only about poll numbers. It's not only about debates. The most important thing that's going to elect Trump, the most important thing that's going to catapult Trump, regain the Oval Office, is the fact that Democrats have mismanaged the economy. And every cataclysmic day, the only silver lining, I know people are losing money. And again, if I needed my retirement saving, I'm not saying for you to do anything. If I needed my retirement savings, I would go into money market or pull my money out or go into just money market. Because you could do that in your IRA or your 401k or your retirement plan. You can sell your mutual funds and go into money market. So I talk to your accountant before that. Obviously, talk to your accountant about any tax implications. I don't believe that there are any tax implications in 401ks or IRAs if you do that. IRAs, I don't think you have any tax implications, but as long as you keep the money in. But I would get out of securities, stocks immediately if I needed the retirement next week, next month, next year. Now, you never want to time the market. The market could go up this week. It can go all the way up this week, and then I think it'll crash. It can crash even more so tomorrow. Long term, within 3 months, or short term, I should say, the next 3 months is going to be a catastrophe for the stock market. I think. And I'm not giving any investment advice. I'm just giving you what I would do if I was going to retire.
Household and personal products down 1.4%. So yeah, all red, only a tomato pie there today.
I love that. All right. So it made it really tough to find some gainers, but I did find a few. Killanova up about 16%, just off its highs of the day. Top #1 gainer in the S&P 500, up the most there. And Advanced Micro,
obviously. And adjusted EBITDA down 71% year over year, $214 million. Analysts were looking for $254.7 million.
Now, take a look at some of the losers in today's market. Much bigger company, NVIDIA, was at one point down like 15% and had lost almost $400 billion of market cap. So this 6% loss doesn't look as bad as it could have been. Nonetheless, dollars of market cap.
I'm not going to say anything, but look at, you could forget Apple, or don't forget Apple, NVIDIA, Coinbase. Crypto is going to crash a lot further. You could see Bitcoin at $10,000 before November, okay? Ladies and gentlemen, I'm not right about everything. You know I'm not right about everything, but I've been calling this market crash for 2 years, people. Everyone here, I have been repeating myself ad nauseum, endlessly like I usually do in the most annoying manner. I have a playlist of 15, 16 videos. I have been telling you that the market is going to crash, and I wrote about it in the Federalist, and I've talked about this. We're seeing the crash, the only silver lining, and it's unfortunate that the market has to crash for this to take place. The silver lining is that it cements a Trump victory. But crypto is going to absolutely just tank. And you better make sure you're able to redeem or, better make sure you're able to get your money out of where you're storing crypto.
At one point, down like 15% and had lost almost $400 billion of market cap. So this 6% loss doesn't look as bad as it could have been. Nonetheless, obviously, it is at least one of the 2 world's biggest companies. So a huge drag on the S&P. Apple as well. The Apple story, I think, is fascinating. Warren Buffett has sold, we found out this weekend, entirely half of his Apple shares.
When Warren Buffett sells half of his shares in any company, I don't care what the company is, that's bad news.
Still has a massive position.
Massive.
In Apple, like 400 million shares, but and Apple had rallied up into the end of the week, but that story hurt Apple shares considerably today. Again, not as bad as they were this morning, but we're still closing down significantly on what is a very large company. And then I had a look at, Robinhood and Bitcoin and Coinbase were all down because of the underlying asset. I'm guessing you can trade Bitcoin and Robinhood. It hurt that platform. You obviously trade Bitcoin on Coinbase, and it hurt that platform. Bigger stock as well, but in general,
I don't know, a lot, like, this is not a financial channel and I don't give financial advice. If I owned Bitcoin I would not use any of the exchanges or places like, this place right here. I would make sure that I am able to pull out or redeem or able to sell what I have in terms of Bitcoin. And I would actually, if I own Bitcoin, which I don't, I would sell it now. I think it's going to absolutely tank. I think crypto is going to absolutely tank. I think Bitcoin could get to $10,000 easily before November. I mean, again, I'm not giving anyone advice. You know what? My advice, financial advice, is worthless. Don't listen to me. I'm just giving you my opinion of what I would do if I was about to retire or had crypto or whatever. But anyway, something I do know about, I called this crash, and I have a good aggregate sense of what's going on. I told you that Biden would resign. I told you there'd be a crash. I'm telling you Trump's going to win, primarily in large part because of this financial downturn.
Bitcoin has been a risk indicator. So with this huge risk off feeling pervasive in the market, Bitcoin at one point was down like 16%. I think it's down right now about 9 or 10%.
9%, yeah.
And that is hurting anyone who's related to it. MicroStrategy also a big loser in the market today.
All right, I'm taking a look at the bond market. It looks super boring right this second, but man, was that a day for a bond trader.
What a turnaround.
So, I mean, really, at one point you had the two looking for about 800.
This company, let me give you the headline.
I'm going to go right to the outlook. Third quarter adjusted so far this year in 2024.
So you're going to see more selling, ladies and gentlemen, a lot more selling. Again, if the market goes up tomorrow, that doesn't mean that Harris is going to win, everything's going to be fine. The genie is out of the bottle. The toothpaste is out of the tube. You can't unsee what you've seen in terms of the jobs report, inflation, recession on the horizon. This is going to be a terrible market crash. I've been telling you this for 2 years. More importantly, the political analysis linked directly to the market crash is that Trump is going to win without a shadow of a doubt. Democrats, they're brilliant, skilled at indoctrinating people. But if the market and the economy melts down, no amount of indoctrination can catapult the Democrat to the Oval Office. Okay? And this is directly the fault of the Democratic Party and Biden. And I write about that in the Federalist 2 years ago.
The latest jobs report came in weaker than expected, only 114,000 jobs in July. The unemployment rate jumped to 4.3%. Steve Moore joins us now. All right, Steve, are we headed towards a recession?
Well, speaking of hurricane forces, what's happening in the market right now is certainly unsettling to everyone. By the way, I remember, I don't know if you do a store at the 1987 famous sell-off where we had and that was one of those things which it turned out to just be a blip.
Goldman Sachs down 17 points today. Isn't that interesting?
Where, about a month later, we were right back on our merry way to higher returns. I don't know if this is the start of something really deep like a recession or whether this is one of those blips, but I'll make a couple of comments on it. One is, it is interesting to me, and I'm not saying this is statistically significant, that as Trump has dropped in the polls as he has over the last 10 days because of this kind of Kamala phenomenon, the market has reacted in a negative way. Why? Because Kamala Harris is really bad for investment. This is a woman who wants to double the capital gains tax and tax unrealized capital gains and those kinds of things. The other thing.
How do you tax unrealized capital gains? How does that even work?
That I would say is, you were asking earlier, should the Fed meet now to cut rates? And I say yes. I think they should. I think if you're looking I like to look at commodity prices as you do, Stuart. Commodity prices are falling very rapidly right now. We've moved from a problem of inflation right now to deflation in prices, and I think the Fed has to act to stop that.
So we don't know if there's more selling still to come on the stock market. We just don't know that.
I don't know that with 100% certainty. I know that with 99.9% certainty, there's a lot more sellings to go, and it's going to be a catastrophe like '08, like 2000. Maybe worse.
Do we?
We don't, of course not. If I knew the answer to that, I'd be in Tahiti right now making a lot of money. But the fact is, what we do know, though, is
I am too chicken to short the market or buy puts or anything like that. So
you've seen over the last month or so a pretty steady decline in commodity prices. They're falling pretty rapidly now, and that is an indication the economy is really slowing down, Stuart. So yes, I think it would be. I think that. And by the way, in the past, I haven't been so supportive of a rate cut. Now I think one is needed, and the only question is, do they go to a quarter point or 50 basis points?
And the only question then is, how will Wall Street react to an emergency rate cut? I've no idea.
So the Fed cuts rates, and then billions are pumped into the market, only for what? An inevitable greater crash? That's the only thing that I could say Powell, I can understand why he didn't, even though he mismanaged everything. You know, the Fed should have told people, Democrats 4 years ago, hey, you know, if you shut down economic activity and we're forced to pump trillions into the economy, that's going to lead to inflation and an eventual market crash. But I guess they don't know enough about economics to give that you know, prescient advice.
Idea how they'd react, but it looks like.
Well, look, I guess, yeah.
No, go on.
My reaction to that is, if you're going to do it, do it. Why wait? You know, why wait another 4 weeks to do something everyone knows is coming? But look, I'm not rooting for a recession. Remember, all the economists were wrong in 2023. Remember, Stuart, they're saying a recession is coming. Well, it never came. So I want to be on record. I'm not saying we're facing a recession, but I think it is a frightening time. And look, I think it would be good if Kamala Harris came out and said, look, I'm not going to raise taxes.
Yes.
I'm not going to, but I don't think she's going to do that.
She's not going to do that. I very much doubt.
Right now, Harris and Biden I don't think they are interested or know anything about how the stock market affects everyday people. They don't know that layoffs and job losses and possible bank failures and possible hedge fund bankruptcies, they don't know that all of these things could take place. They don't even care, really. They don't care. As long as they have media, the Washington Post, New York Times, MSNBC, CNN, The Atlantic, pretty much every major publication, they can simply try to convince enough people needed for victory. I don't think they'll be able to convince enough people in 24. I think Trump is on his way to regaining the Oval Office because this is only the beginning of a market catastrophe. Again, the stock market is politics now. Okay? There's no difference, people.
We are covering a global market sell-off this morning. This is underway right now. Now, the Nasdaq entered correction territory on Friday, but we have seen a worsening in the futures market of the major indices since we have been on the air since 6 a.m. Eastern time. We are barely off of session lows, but the Dow Jones Industrial is now down 1,250 points. That is a loss of more than 3%. The Nasdaq is down 1,067. That is a loss of 5.75%. And the S&P is down 231. That is a loss of more than 4.25%. I want to say also Europe is also in a tailspin. Just to let you know here, we do have the FTSE, the CAC 40, and the DAX, and all of them are substantially down. Germany taking the worst hit, down almost 3.5%. Asia, we had read across the board, and remember what we saw in Japan. Japan's now in a bear market. Japan lost 12%, over 12% actually, at the close. Mark Tepper and Liz Peek are on set with me. We have been watching this together all morning long. Mark.
It's getting ugly real fast out there. So, I mean, look, right now, the volatility index or the fear gauge, which is a measure of how afraid investors are right now, it's at a 65. And just to put that in perspective, if we go back to March of 2020, when the pandemic was full swing and people were locked up in their houses, it was 53. It's 65 right now. You go back to March of 2009 when we had the banking crisis, it was 44. We're We're at a 65 right now. Investors are incredibly scared. And I have to tell you, this cannot just be due to Friday's payroll report. Because on Friday, the market was down.
So this man is 100% right. His analysis is excellent. He has a brilliant analysis on all of this. Look, it's not about, this is an overinflated market where the bubble exists. The bubble was created because Democrats spent so much in terms of debt and deficit, but mainly they shut down economic activity 4 years ago. Then they flooded trillions in fiscal and monetary stimulus. I'm going to speak slowly so the morally superior, highly educated liberal Democrats who happen to stumble upon this channel can understand, because they're highly educated and super moral, okay? The quest of the Democratic Party media and experts to keep people, wonderfully safe and happy. When they forced an economic shutdown, when blue state governors shut down economic activity, and there were still red state holdouts, the Trumpers, and media said there's still some Trumpy states not closing up. What they did was an economic sin. Everything we experience from here on out is the fault of people who pushed to shut down economic activity when the average age of the U.S. labor force is 41 years old, and the average age of somebody who lost his or her life to you-know-what was 65, 73, it varies depending on the state, 67 to 73. Okay? But the labor force was prevented from working. Then Democrats said, eviction moratorium. That's why AOC and Bernie Sanders and left-leaning, the left does everything to destroy the working class that they claim to care about. It was actually Trump that helped the working class immeasurably. But some people are too stupid to understand that. Let's continue.
About 2%. So there's more going on than just that. I think the other two issues are, number one, Warren Buffett unloaded half of his Apple position. That's a guy who's buy and hold forever. All of a sudden, he's, maybe he doesn't have a high conviction on Apple going forward. And then obviously the increasing probability of a full-scale war in the Middle East. You put those three things together and it's an ugly situation in the markets today.
And the reason we have that probability through the roof is because there's no vision. Forget about military force. There's no economic, diplomatic vision. Have you heard Biden or Harris ever state, we're going to prevent this conflict? Not once in 4 years have I heard Biden say, hey, man, let's prevent this conflict. I haven't heard the vice president say, let's prevent this conflict. I have not heard any Democrats say, the good liberals, I haven't heard anyone say, let's prevent this military quagmire conflict bloodshed. I haven't heard them say that. Gee, I wonder why.
And Liz, yeah, I mean, the initial, caveat to this was that jobs report last Friday, and we saw the market sell off on Friday. Fears of a recession, brewing over the weekend. But to Mark's point, you have a potential strike on Israel by Iran, as well as
consumer sentiment being in the toilet again and perpetually over the last several months. The fact that consumer spending is dwindling. I just think there are an awful lot of reasons people were concerned about a possible slowdown in the economy. And now there is actual evidence that it's happening. And the tip of the spear is job creation. And if we begin to see.
This is all true. And by the way, I will have a live stream tonight on this channel regarding the Nikkei. I think the Nikkei is going to tumble once again, which could also, again, lead to further losses. And I think the whole week, the whole month, the whole 3 months, you'll have up days. But there's going to be, unfortunately, that one day with, 4,000, 5,000 point drop, potentially 3,000, 4,000 point drop in the Dow, unfortunately.
see unemployment go even higher, that really discourages spending, and that's 70% of the economy. I also think, and maybe it's just me, the country feels completely leaderless. I mean, who is speaking out? Who is talking to the American people? Joe Biden can't. It really appears like every time he tries to do that, it's kind of a catastrophe, and Kamala Harris has not stepped up. So here we are, as you point out, Cheryl, facing increased possibility of actual war now in the Middle East, but talked about for months, but now it seems to be at a breaking point, and there is no one talking to the American people. I think that's very unnerving.
Donald Lutzkin mentioned that to us earlier in this hour about the fact that it's a compounding effect of what you're saying, and that you're saying not the jobs report, concerns about about a potential recession. The Fed did not make a move last week. Are they going to cut by half a point next month, a quarter point? All of that, Mark, is changing. And then I do want to point out to our viewers that I was looking at the 2 and the 10 year just now, and the 2 and the 10 yield curves turned positive, which isn't a good thing. So that's something else that we're watching right now, Mark.
6.5 cuts are now priced in by the end of January. That is incredible. And that only happens if you are expecting a recession. The Fed's not doing that to be nice. They're not doing that to...
Brilliant analysis. Who is this gentleman? Yeah, he's excellent. Okay. They know. I guess last night I came to the epiphany. Powell and Yellen and Democrats don't know anything, but Powell and Yellen know that there's going to be a crash. They're not stupid. Do you think look, I'm a smart cookie, but I'm not a brilliant economist. I have common sense and a little bit of wisdom. Democrats, or I should say the Fed, apparently lacks wisdom, but they're brilliant economists. You think they don't know that there's going to be a crash on the horizon? Of course they do. That's why they're saying, oh, rate cuts. Like, well, why didn't you cut rates before? Oh, that's right. Inflation is out of control. Well, aren't you worried about inflation? Oh, that's right. You're not worried about inflation when there's an actual crash in the economy. That's what you're expecting. Okay.
To lower mortgage rates so people can buy a house. That is trouble. That spells trouble. And I think I think investors are finally starting to come to the realization that, investors wanted to have their cake and eat it too. They wanted rate cuts with no recession.
Yeah.
That doesn't happen that often.
We could be hopeful that was going to happen.
Correct. But obviously things have changed. Yeah. And when you're looking,
I will have a live stream also tonight, people. Be here tonight as well.
All right. Jeff Seeker joins me now. You think that we're going further south on this market, don't you?
I do, Stuart. Last night at around 12:05, if you follow astrology, the Mercury is in retrograde, which the astrologists say it's a time of chaos. I don't believe that. I just think it's interesting. Yeah, but no, that's not the real reason.
Well, you got us all smiling anyway. Go ahead.
That's not the real reason. The real reason, Stuart, is I know everybody's talking about the typical valuations, interest rates, as Brian said, concerns about the Fed. But what I see is a much deeper problem. And that deeper problem came out of Japan in trading yesterday, where they halted both the stock and bond market. What I see is there's a problem in the credit market, because what Brian was saying about the Fed cutting interest rates, have they raised interest rates too much? What we're seeing in the worldwide credit market is we are seeing counterparty risk. And what that means is we could start to see an avalanche of credit defaults, of problems with the banks. Now, what does that mean for the U.S. market? What it means is that, yes, you're going to get these quick fix rallies. You're going to get these anticipations of interest rates being cut. But what we have in the banking system is a...
Paul Bartlett, thank you so very much. To my super chat, thank you so very much. This gentleman is also extremely intelligent, brilliant analysis. Have I not been saying, ladies and gentlemen, little old me, and this is a small and growing channel, and I'm blessed to have everybody here. Have I not been telling you for years I think that banks are going to go under. When you're a new member of this channel or new viewer, you get a video of me 2 years ago with my, if you remember the old school background, I had amazing vintage sport magazines, Sports Illustrated magazines, Life magazines. I had a whole bunch of cool vintage magazines of all kinds. And anyway, I told people, I said, banks are going to go under. Not like Bank of America or Wells Fargo or Chase or Citibank or Citigroup. I'm talking about like smaller banks. You should probably, I'm not giving any investment advice. If I had all my money in a small regional bank, I'd go and get that money out immediately and go to one of the top 5 banks. I'd have less service, but they're too big to fail, and they're too big to fail. The United States government will never in a billion years allow the top 5 banks to just simply go under, but they might allow much smaller banks. They didn't with Silicon Valley and the other banks a couple of years back, but who knows?
There's a massive amount of debt. We have $1.5 trillion that needs to be refinanced in commercial loans, which is what I do. I'm in the real estate industry. There's a lot of vulnerability out there, and what I've been saying on the show all along is that the market obviously was too focused on a few stocks. I said on the show last week that earnings would be lackluster, but what I believe is going to happen is we're going to see a credit crisis that we haven't seen in a very long time, and it's problematic.
Okay, outside of the credit problem, which you're right to raise on this show, what about the recession? Are we headed to recession?
I believe we are, and Stuart, it's been the consumer. The consumer drives 70% of the market, and the consumer has been pushed to the brink, and we're starting to see that. Now, there's been this false belief that the strength of the employment market, that it had to do with the amount of employees that are being hired. What is in reality is that 1.2 million Americans, U.S. citizens, lost their jobs, which were replaced by 1.3 million foreign-born or illegal immigrants. That is U.S. labor statistics. That shows that the labor market was never as strong as it was, and a lot of the new jobs being created by part-time workers, it's never been as strong as it was. Now you're going to see layoffs, and there's going to be more carnage in the future, leading us to a deeper recession.
Okay, when it comes to the market, how do investors protect themselves? What should an investor do today?
Well, they shouldn't look at astrological charts.
No.
But what they should do, they shouldn't also panic. What they should do is look at where they're over allocated. Too many of us have too much money in those big 7. Reduce those. Just cut them. But don't sell them. Don't sell them entirely, but reduce.
How do you reduce your stake if you don't sell?
Well, you sell, but don't sell out completely. So you reduce the amount of shares you have and raise cash.
So this man knows more about finance and stocks than I do. He's brilliant. He's actually said a lot of the things that I've been saying. I respectfully disagree with one thing that he said. If I needed the money, I would sell everything immediately. And if I needed the money, see, people, if people say, well, I'm going to retire in 6 months, well, then what are you doing in the market now? Does that make any sense at all? Oh, well, what if it goes back up tomorrow? Okay. Then if it goes down even worse the next day, who cares? You've already seen a 12% drop in the Nikkei. Okay? You can't unsee that. Recession is probably on the horizon. If it isn't, the market crash will force it to happen, unfortunately.
We all need advice, and Charles Bane is here to give it. Welcome to the show, Charles.
Welcome. Thank you.
What should the little guy do?
First, let me tell you what I think is driving this, because I've heard you ask a lot of people. It's not just one thing, obviously, right? I give 65% to Jay Powell and the FOMC. Not just from Friday, but from the very beginning. That first rate hike should have been 75 basis points. Growth, everyone's coming to grips. Earnings won't grow as fast as they thought they would. The economy obviously is slowing a lot faster than anyone thought, at least the experts. The carry trade that Steve talked about, 5%. Geopolitical risk, 5%. And the Harris poll numbers, 5%. Particularly if you look at the hardest hit sector here. Dave Monson mentioned Nasdaq. That's not the hardest hit. Small caps. Look at what's happened to the Russell in the last, let's say, 72 hours, maybe 4 or 5 days since Harris started going up in the polls. They have crashed. That was a hot trade, right? That was where everyone was saying the transition was going to be.
Trump is so genius. The more they try to elevate Harris, the greater the chance Trump wins, because media absolutely frightens Wall Street, which is hilarious, saying that Harris is going to win. It's so funny.
From big tech to the Russell 2000, the domestic economy under President Trump, that all has gone away. So
Look, we've still got a sell-off in progress.
Yeah.
I'll show you the fear gauge. It's called the VIX. You know what this is all about. The figure, it briefly topped 60 for the first time since March of 2020 as we were getting into the pandemic. Now it's 39.18, I see. That's the VIX right now. So that's moderated just a little bit, but not much.
The rate of the move is what's important, right? I mean, we've never seen, I think this might be one of the biggest moves in history in terms of just in the last 48 hours. Just mind-boggling. Over 175%, 160% overnight. It was 23 on Friday, 65 at one point this morning. Mind-boggling stuff. You cannot ignore it. If you're an investor, here's the thing I'm telling my subscribers. We were closing a lot of things early last week. Today, there's a couple of stocks that aren't going to come back anytime soon. Come to grips with it. Take a loss. You want to build cash because this market is going to be oversold at some point soon, and you want to have the cash to go in there and buy it. A lot of times people
love Charles Payne. He's 100% right, but I don't know about anytime soon. Could be next year. Could be a year and a half from now.
Come on our network, and we always say you buying the dip. In real life, people can't buy every dip, right? So you want to accumulate some cash here. Come to grips with what's not going to work, what's not going to come back. Because a lot of times in a great bull market, even sloppy stocks can go up, and you can get saved by the market. In this particular case, it's going to be very selective on the way back up, I think.
Suppose the Federal Reserve came in with an emergency rate cut. I don't know, 25, 50, but I don't care what it is, but an emergency rate cut. Well, that's good or bad for Wall Street?
I think initially the market may recoil, but I think ultimately it's good for America, it's good for the economy, and it would be good for the stock market. That's why I brought up the first rate hike. See, the Fed, Jay Powell's so concerned about imaging and looks. Everyone keeps saying, if the Fed does that, everyone would panic. Sometimes you have to panic. Sometimes the theater is on fire. I mean, this whole notion in life, you don't panic. Sometimes in life, you do have to panic. Sometimes you are caught off guard and you have to take action. This too cool for school thing, it's not working. It didn't work in the very beginning when they thought inflation was going to be transitory, and they took a pedestrian stroll toward hiking rates, and it's not working now.
I couldn't agree more. I watch, some stock market channels, and I notice the people who are younger, like in their 30s or late 20s, early 30s, they don't really remember 2008, and they definitely don't remember 2000, and they definitely don't remember 87, and none of us remember 29, or very few of us. And if you remember 29, you're watching my channel, God bless you, I love you. But they're like, oh, don't worry, the market comes back. Like, well, yeah, the market might, your stocks might not. Just because the market comes back doesn't mean your stock portfolio comes back. Depends on what you have. It also took a long time for the market to come back after 29. So, and you also have to, the market came back in 2000, 2008, and 2020, that was an artificial, deliberately created crisis, okay? You didn't have to shut down economic activity. That was the most unintelligent, foolish, pathetic thing to do. But anyway, we have more debt than ever. We have more higher deficit, national debt than ever. Okay, we have, global problems that in many cases we've never seen before, or in many cases we've never seen before. Just because the market came back in 08 or 2000 doesn't mean it's going to come back so quickly now. Okay?
Look like you really want to get into this.
I wonder if maybe Jay Powell moves the goalposts and we abandon the 2% inflation target. Sometimes, seriously, my kids want ice cream before dinner, but the rule is ice cream after dinner. So sometimes
I've been saying that for a long time.
Behavior, you give them ice cream before.
I've always
get
asked
rid of the 2%. Get rid of the rule.
To Lauren's point, where did 2% come from? Where did this? Why? Realistically, with all the debt you and Steve just talked about, and the different financial economic conditions that we're in, 2% may be too low anyway. I really believe that the new normal is going to be closer to 3%.
But that would create panic, wouldn't it? If the Fed suddenly raised its inflation level, that wouldn't be much stability, would it?
What are you looking at for the last 48 hours? There's always going to be panic, near-term panic. We're talking about long-term stability, and something is wrong. Let's not forget, when the Federal Reserve was created, we were promised no more boom and bust cycles, right? We had 4 panics in the 1800s that were devastating. We had the panic in the early 1900s. They said, that's it. We're going to create this central bank, and we're going to 1913, and we're going to never have panics again. We're never going to have crazy business cycles. That's all we've had since then.
That's true.
Maybe it's a time to make some adjustments. You know what they really should do? Congress should take back the responsibility of full employment that they gave to the Fed in 1977. So our Fed just has one job. And by the way, take away some of the other jobs that we're giving them. They're too powerful. They're too omnipotent. And unfortunately, when they move slow and they make mistakes, we all pay a heavy price.
Today's the day when we have to watch you at 2 p.m. Eastern right here on Fox Business, Making Money with Charles Bane right here.
Love Charles Payne. Well, little old me told you for 2 years. I kept telling you, ladies and gentlemen, it's going to happen. And it finally happened. Again, ladies and gentlemen, politics is now the stock market, and it's now the economy, inflation, regional banks, hedge funds, crypto. That is, in addition to the Supreme Court, which I'll talk about, in addition to poll numbers, in addition to debates, in addition to politics, pure politics is not going to be the same storyline or, the same news cycle that you're used to, people. Get acquainted and definitely check the stock market and the indices every day. You will on my channel. It's directly linked to Trump's chances of victory, which are now overwhelming. Trump has basically already won, especially since the market's going to tank a lot further. He's calling it the Kamala crash, which is amusing. Anyway, God bless you. Hit subscribe. I'll be at the Stock Market Crash channel right now. Be there. Also, be here tonight at around 10:30, 11 p.m. We are going to look at the Nikkei and the global markets and the Nifty in India and other global markets. Thanks, everybody. Be here tonight at around 11 p.m. Eastern. Thanks, everybody. God bless. Go to the